Hey everyone, Sergio here with the Rideshare Guide. What do we say on Show Me the Money Club? Work smarter, not harder. If you aren't using the Solo app, which I have been for the past year and a half, you may be working a lot harder than you need to. Let's change that. Download the app, link your account where you can manage your income, track your expenses, as well as your taxes. Not only that, but you can plan by optimizing your time, make more money, and even guarantee your daily pay with guaranteed earnings. Download the Solo app today. Begin to work smarter, not harder. Link is in the description. Let's get back to it.
Let's talk about car repos. Why are Uber and Lyft cars getting repoed? In fact, there was a video that just came out, about a week ago at this point, and I'm sure several of you have seen it. Maybe you haven't. If you haven't, Lucky Lopez is the channel, and it's why are so many Uber cars getting repossessed. He does a pretty good video breaking it down there. So I think it's only like 11 or 12 minutes or something, from what I can remember.
Well, Lucky Lopez is not in the Uber Lyft business. He's in the he's a car broker, so he's in the car business. And but he did this because you guys will watch the video, I'm sure. But I had mixed feelings about this video because some points of it were valid and some I am not sure. But I haven't done thorough research on it because video dropped a couple of days ago, and I watched the whole thing. And there are parts of it that I agree with, and there are parts of it that have been the same and I disagree with the video, but go watch it yourself, make up your own mind. Basically, he was at an auction. He's a car dealer, a broker. He was at an auction, and he was seeing a lot of banks offering cars that used to be from X. He was talking to people, and he from X, well, not X, current Uber and Lyft drivers. And he says, how did they know that? It was way over miles, right? Miles were way over what they should be for the age of the car. But his point is this now. He's contending that if you get a car, if you lease a car, or if you get a loan on a car, and if the bank finds out that you drive the car commercially, because they have had horrible experience in the past with these cars, coming back to them with 100,000 miles after a year and a half, they now supposedly, according to Lucky Lopez, are repossessing these cars before you put 100,000 miles on it and then trash it and then not pay your loan value. But I'm thinking, as long as the payment is current, I don't think they can do that. Now, he's saying that once the bank or the lien holder figures out that you're using the car for Uber and Lyft or for commercial purposes, they have the right to come and repo your car, regardless of you making the payments or not. And one point that's very important, if this is true, he was saying that once they take the car from you, they'll immediately put it in auction. Well, since you have 60, 80,000 miles in a year on the car, the value of the car has dropped, but you still have a note on the car, let's say of $20,000. But the car's value, because of high mileage, has dropped extensively, and the car is only worth 10. They're going to ask for the 20 from you as opposed to the value of the car. They're going to sell the car for 10. The difference, they're going to still ask for the difference. So pay attention to this. And when you are signing the paperwork from a loan from the bank or a lease or whatever you're doing, I would make sure I would read that whole thing. I would read the small print. Now, I wouldn't directly go ask the bank or the loan officer or the car salesman that you're working with at a dealer, oh, I'm going to drive this for Uber and Lyft. You may not get anything right then and there, but
no, first off, you don't want it. Look at the paperwork, read the paperwork. If it says anything about rideshare, for hire cars, or whatever it might be, using the car for commercial purposes, whatever it might be, when it comes down to it, read the fine print. If it's not in there, don't ask them about it, because that's giving fuel to the fire. Oh, you're going to use it then, because they're going to automatically assume that. Maybe they don't have a problem with it. Maybe they're fine with it. It doesn't matter. But yes, when it comes down, a lot of leases actually do have some stipulation in there. One, because of the mileage. So you already have a agreed upon amount of miles that you can drive, because what they do is take into account the depreciation based on, you know, the amount that you're going to be driving. Anything over that, then you have to pay, you know, something predetermined amount. It might be like 12 cents a mile. It might be 45 cents a mile. It could be a lot of different things. So yes, check that stuff out. If you are leasing a car, which I have no idea why the hell you would, because you're only allotted so many miles. And if you're doing this full time, you're going to go over that in 2 months. So I wouldn't even go near that. But when it comes down to signing loan agreements and things like that, yes, check the stipulations in that completely, because that can have a massive impact, whether you can or not with that particular car or with that particular lender. It really comes down to it. So yes, read the fine print, see what it says. If it doesn't say anything about for hire vehicles, using it for commercial purposes, whatever it might be, you know, then you should have pretty much the go ahead. You can always take it to a lawyer and have them take a look at it and see. But yeah, unfortunately, there are some stipulations that have been built into it that say you cannot use your car for these things, and potentially, yeah, they could actually repo it. So there are things that are built in where that part is true. When it comes down to you know, some of the other things, I'm sure he's probably done some interesting deep dive into it, being on the car side of things. But the other side of that, this is an opportunity, everybody. Instead of getting a car that is ridiculous when it comes to the price, go to your auction, get a previous Uber and Lyft vehicle and clean it up and do what you got to do. And you got a car that's probably much less than what you would have paid for when it comes to sticker price. So you could potentially go to an auction and get a car. If you're going to build your own fleet, you could potentially do that as well. There's a lot of different things that you could potentially do. So use it as an opportunity.
Yeah, I mean, I have, you know, I have broker friends who, you know, will charge you $500 and you can use it. Yeah, obviously, they'll go and buy any car you want from the auction. And there may be some decent cars in there. If this is truly happening, and there's a few hundred people here, has this happened to any of you? For example, you bought a car with a 5-year loan, maximum 5-year loan, and car was repossessed from you. If it is, email me, Sergio at therideshareguy.com. And this is pretty much, actually, I'm going to talk about this on my finance channel as well, but I thought I would mention this. U.S. auto loan delinquency rates keep on surging. Subprime auto loans, which most Uber and Lyft drivers probably are subprime, delinquency rates just crossed over 5% for the first time in history. Since 2022, the 60-day delinquency rate for subprime auto loans has more than doubled. Now, I'm also kind of thinking this has something to do with the administration's immigration policy, because if you're getting deported, and if you bought a car with subprime loans, what are you going to do? You can't put the car on the plane and take it to where you're going. Delinquency rates are now above the peak levels recorded in 2008 and 2020. Furthermore, prime auto loan 60-day delinquencies have risen to their highest in 14 years. So what does that say about the economy? I am not sure. Yeah, folks, if something like that happened to you, please email me, Sergio at rideshareguy.com. And please, while you're at it, go subscribe to my finance channel, because we talk about important stuff like this, and the markets, and trading, and investing, and finance. So that's that.
Yep. Always read the fine print. Really comes down to it. And, you know, hopefully, one of the things though that he says at the end, you know, if it's something that you do want to do, the best thing to do is get an LLC and put it under that as a business, you know, create your business and do things that way, which, yes, you can definitely do it that way. They're going to know that it's used for that purpose, but it's also part of the actual business that you are in. So it's a much different position. And then, you know, that can open the door for private rides and things like that, which I would always recommend doing it under an LLC, because you keep your personal assets away from business assets, and it's going to protect you in the event that you get into an accident, any issues like that, injury, whatever it may be, lawsuits, all of that stuff. So that is one step. There's unfortunately a lot of crap that you have to deal with when you are trying to open up or do any type of business. So yes, unfortunately, if you don't know that, there's a lot of red tape and bureaucracy. So yeah.
Yep.
But when you get it done, it's done, and that's good.
All right, thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself, Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.